Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Marjan Riggi. Marjan is a Senior Managing Director with Kroll Bond Rating Agency. Marjan, thanks for agreeing to do this again for our Aviation Industry Leaders Report. I should say we're recording this 5 days before Christmas, so we can talk about how current that'll be in a minute. And before maybe we get into the meat and the questions, do you want to tell our watchers a little bit about where Kroll sits in the aviation finance world?
Sure. So, I'm head of transportation finance at Kroll, under which we rate our transportation companies, importantly aviation, which is actually the biggest part of our market, our rating universe, let's say. We started covering the market in 2013, and we very quickly moved into the ABS aviation market, and now we rate every single ABS deal out there globally. Meanwhile, we also started at the same time rating aircraft lessors. Now we rate like 6 or 7, including a couple of private ones. We rate many airlines, more like on an estimate basis, because they support a lot of our secured aircraft transactions and our WTC rated transactions. So I want to say something like we have over 300 rating estimates for airlines. Also, we do pretty in-depth analysis of aircraft stresses for our ABS team, who does the ABS aviation transaction ratings. And we also have made a name for ourselves, mainly in more esoteric type transactions on the secured aircraft side, mainly in the private market. So I want to say we've rated something like around 150 secured aircraft transactions that are either lessor WTC type deals, they're WTCs, lessor backed senior unsecured or secured transactions.
Oh, that's great, Marjan. And it's probably a logical place then to start is on the debt and capital markets. Interested in your thoughts of where the current state of the traditional aviation lending market is, and also your thoughts around what we're seeing in the kind of non-traditional lenders that have sprung up really since the outset of the pandemic. What are your thoughts of where that market sits versus how it's evolved since, say, March 2020?
Yes, so actually there have been very interesting developments, which I think people didn't really expect. Well, I think initially, right after March 2020, given all the mass groundings of aircraft, of course, and all the airlines, suddenly finding themselves in big trouble, let's say, there was a lot of a need for financing, and of course the government stepping in helped a lot. But I think that the government stepping in really had to be combined with airlines and aircraft leasing companies to go out there and create more liquidity than ever. I think the focus initially was liquidity, and I think it remains liquidity to be able to offset some of the cash burns. For airlines and for leasing companies was to be able to deal with a lot of the aircraft lease deferrals that they had to deal with. I think surprisingly and positively, both airlines and aircraft leasing companies were able to go to market and do really huge amount of debt, both on the unsecured side, on the WTC type side. I think that the loyalty programs became a major source of financing for some airlines, and they did really well in the markets. So I would say in summary that at least initially, what was really interesting is that, despite what people thought, and maybe it defied logic somewhat, that the capital markets and investors clearly thought very positively about the aviation market in the long run, even though we had aircraft on the ground in a very big way all over the world. And I think that that really speaks to the fact that investors think more long term and that the fundamentals of travel still remain really strong, and they saw through it even after nearly 2 years of this going on. So I think that, these were really positive things for aviation, I would say, and it's helped support airlines and aircraft leasing companies. Meanwhile, we've had some consolidations. We've had quite a few bankruptcies, as you know, especially in 2020. But I would say that all the newer ones were more smaller ones. It's almost like the big names, we already knew who they were. And some of the bigger ones clearly got into trouble. But I would say that where we're sitting right now, we see a more consolidated market. We see quite a few moves toward new fleeting, meaning younger fleet age, refleeting of most airlines, and I think with all this coinciding with the importance of ESG and trying to defray carbon emissions and reach the targets for 2050. It's really, all of them have been amalgamated to start like a very interesting new, I would say, dynamic for aviation. We're moving into much younger, better aircraft, more narrow bodies versus wide bodies. Many of the overcrowded markets with airlines have really shed some of those weaker airlines. There's been quite a few consolidations going on. Aircraft leasing market, of course, we had the big aircraft GCAS consolidation. There have been some other ones on the side. And I think that you've also seen a move away from Chinese money coming into the market. It's been moved more toward the Japanese money, it seems, for some of the aircraft leasing platform investments. So I guess, just to conclude on that one note, the other thing that I think in 2021 we've seen is that because banks started pulling out of those markets because of a lot of their capital requirements and also the stress in aviation, one of the really, really interesting things we saw in 2021 is move toward lending by non-bank lenders. Many private equity firms have set up lending programs, and it's become, I see it from my side, and it's become really, really successful. Lending to airlines, and then they're grouping the loans together or one by one, and are offering it to private investors who seem to be very interested, and quite a bit of liquidity in the market, so it really makes sense for a lot of investors.
And that piece around liquidity, the other avenue we're seeing, you touched on it when you're mentioning there, with the ability of the lessors, the investment grade lessors, to tap the unsecured market, Marjan, it's been phenomenal really for the last, ever since about the middle of last year. Your thoughts on the sustainable nature of the cheap money they can raise? And it speaks to the wider market. We're probably going to be in a rising interest rate environment. But in your view, does that just speak to the maturity of aviation finance and the belief in the leasing model, and therefore the large players should have an ability to continue to tap that market at very reasonable spreads?
Yeah, I mean, given by what we've seen, some of the spreads almost defy the ratings. Some of the aircraft leasing companies are going to market and raising unsecured debt at rates that are actually above their rating levels. That already tells you the story, I think. Yes, interest rates going up, it's going to make a difference, of course. But I think that, I would say that, the access to the unsecured market for aircraft lessors, it was something that they've worked on for years now. Since I would say 2012, as you know, many aircraft leasing companies have moved, deliberately have moved toward an unsecured funding model, unencumbered their assets, which is really, really important for accessing that market efficiently, so to speak. And it's really paying off now. I think it's a more longer term trend, frankly. I don't think it's going away. Are the rates going to widen? Of course, but that goes with the interest rate dynamics that we have broadly.
And you look at it from, versus airlines in tapping the unsecured market. And clearly we saw some of the large US carriers go in a big way at the outset of COVID and shoring up liquidity. But is it an easier sell on the leasing side than the airline side now?
Oh, absolutely. I think it was always, as you know, leasing aircraft lessors have always been one category higher from airlines on average from a ratings perspective. So that's always been the case because aircraft leasing companies are really financial institutions more than corporates, right? And they do one thing, and that they do that one thing really well. It's more of a spread business. Airlines are in a completely different business, really, and they're a lot more cyclical. And what does that mean is that they're a lot more sensitive to consumer behavior. Aircraft lessors to me are, they're commercial leasing companies that are, their customers are airlines, not the consumers, right? And that always helps. The other thing with aircraft lessors is the global ones. You do need to be global and diversified, that they benefit from when you have an issue in one part of the world, you can always move your aircraft and move it to another part of the world. And that's worked out really well for them, of course, until COVID, when there was no other option. But I think, COVID also has been really interesting in terms of supporting that model, the aircraft leasing model, in that the aircraft lessors, because of their access to liquidity and the fact that they deliberately focused on that, with having all that liquidity sitting in their balance sheets, because they were able to support the deferrals and by definition supporting the airlines. So the airlines were not just supported by banks and governments, they were actually supported by aircraft leasing companies in a big way.
Can I ask, Marjan, to get that gap, that gap you mentioned that was always there between airlines and lessors,
right?
Has that widened in the last 20, 21 months in your eyes?
Yes. Yeah.
And do you think that's going to be the way on a go forward?
I also think that, to be fair to the airlines, honestly, it's, I'm talking about now large airlines, US airlines, large legacy carriers in the world who were always, strong, and they themselves had been moving toward a better model, cost cutting, delevering, and all of that. And of course, had it not been for the government help, we wouldn't be in this situation of the strength, at least for the airlines and aircraft leasing companies, because they're their customers. But I think that the airlines are very focused on cost cutting. As I said, almost all of them have cut down their fleet numbers and their costs. And, in some ways, COVID helped them try to be able to cut down on labor costs, especially, right? So, it's not like they don't know now they have to start delevering. So I think down the road, we're probably going to go back to, that normal dynamic of one category off from the aircraft leasing companies, because it's a different, more cyclical model.
And your outlook on lessors that don't have IG rating, so they can't tap that unsecured market, it's becoming a more significant handicap to overcome. Your thoughts on those lessors and how they can continue to prosper if they don't have access to the unsecured market?
Well, aircraft leasing companies traditionally, I'm talking about now years ago, before the, getting into the unsecured markets a lot, they always use the ABS market to fund their growth. And that was a common thing, I think, for aircraft leasing companies. One of the things we see now, though, is that even now, you see that even smaller aircraft leasing companies are still thinking about how to move from secured markets and slowly unencumber assets and get into the unsecured market, because it's a more stable market for them, even though it might in the end be a little bit more expensive, but it gives them so much more flexibility with respect to how they can spend their money, especially if they have PDPs too, like if they want to put in orders. There are, you of course have these other fund models, like the financial lessors, I would call them, who've always used the ABS market and they continue to do so. If you have huge aircraft portfolio sales, usually that gets financed by the ABS market. So the ABS market, as you know, has been really, really strong this year after an initial slowdown. So that market is not going anywhere, but the leasing market and the unsecured market is so much bigger than the ABS market, right? And that I think will continue to grow.
Because on ABS, were you surprised at how quick it came back? If you go, closed after the financial crash, like the wider ABS market at that time, and took 5-6 years probably, right, to come back in a meaningful way. We 10 billion transactions in 19, couple of billion before COVID. 12 months later, we were back in the game, right? And obviously there's been a dozen or so transactions this year. We're surprised how quick it came back. We can talk to e-notes in a second, but your thoughts on just what that evidenced, and were you surprised at how quick it did return?
I actually wasn't, to be honest, personally, because there was also a wall of refinancing coming up. And the people in the ABS market didn't lose the fact, I mean, they knew that they will have to also try to become more conservative in the structures. You now see ABS deals that are much with younger aircraft, longer lease term remaining. There are even some loan ones that are kind of like mini CLOs. Structures are simpler. And perhaps, there was lessons learned from the crisis, from the previous crisis. And you know what? There's still a place for older aircraft even. And these fund structures, I think their presence in the market has helped also, because that's what they do. Their access to the ABS market is really important for them, because that's how they take out, their LP funded groups of funds.
And on the kind of equity note side, most of the transactions we've seen in 21 were predominantly debt focused deals.
Yes.
Creating a warehouse, and keeping,
yeah,
call them on balance sheet transactions. Probably a couple in the pipe we know at the moment that are more clubby equity, right? So maybe 2 or 3 equity players, but not quite moving back to the tradable e-note structure, which are anchor and diversified equity holdings. Where do you see that going over the course of next year? Do you think we get back?
To be honest, I don't know. It's a very small market to begin with. And I think it was interesting that we started having this more liquid markets, or at least in terms of the disclosure documents made it a little bit more accessible. It can come back down the road, and I don't think it's a very big part of the market or that's relevant to the broader aviation market. It's for certain types of, equity investors who are interested in taking that kind of risk and understanding it, hopefully.
And on that investor side, have you seen trends since the pandemic hit of capital entering or departing the space, or is it same type of players? I mean, we've talked a little bit maybe at the start. Japan still sticky, private equity. There's just so much cash they're trying to find homes. You mentioned a little bit in China. Your thoughts on how the investor profile for aviation has shifted, or has it shifted in the last 21 months or so?
I mean, it's interesting you say that, because I had thought that some private equity is going to exit. But what I'm seeing is that one group of private equity investors are being replaced by another. The amount of interest in the market, especially from private equity investors who have higher yield targets, is actually interesting. That they are still, flushing the market with liquidity. There is like some distress in one part within like an aircraft lessor or an airline. The next thing money is coming in from various sources. And I think what I said, I mean, that's the thing too, because I think that people really think that there's a lot of value in the market. And honestly, I also think this is like not very transparent, but behind the scenes, I think what really matters too is the distress in the market has helped. Why? Because the money comes in and buys aircraft at a certain price, right? And they look at their long-term yield targets. So when you have distress in those markets, it's always good for private equity because that's what they do. They're thinking about it long term and what their final IRR will be, not what we're facing now. And as you know, the aircraft prices are are not transparent at all. So we don't know how much they're paying for these pools of collateral, but you can guess that it's not as much as they did before.
And
At
one
least
of the
not initially this year. I mean, now things are becoming frothy again, but initially, no.
And one point you touched on earlier was the fleet and the ESG type agenda. What's your sense on the real impact that's having as of now? Is it impacting on the types of investors that are coming to aviation? Doesn't appear to be impacting on the interest rate that's being raised. Do you think it's having a real impact on actual returns at this point in time? And if not, when do you think that's coming?
I think it's too early to tell whether it's impacting actual returns. I think it's more of a long-term play, but there's so much focus on it from investors and just the population as a whole. And more in Europe, I would say, than in the US. But even in the US, I mean, every conference you go to, it's about ESG, as you know. The amount of focus on it is really interesting, and how every kind of corporate coming in with some kind of a public gesture of one sort of another in what they're trying to do to combat this. Because of course it's a very, very important thing, as just normal consumers and normal population, not in aviation, we're all seeing how climate change is affecting us. So it's like something that we're dealing with daily. I think it's a more longer term target. The tricky thing about it, I think, from a ratings agency perspective, is that there are so many rules and they're not apples to apples, so to speak. And to understand what's going on in these markets is not that simple. And as a rating agency, we've made a huge effort in our approach to ESG, and try to make sure that we only deal with things that are credit related, and that we don't make like political statements about what people are doing with their ESG issues, because it's not for us to say, right?
But that element, do you foresee we could have sustainable aviation finance as an offshoot where we are?
Oh, well, we've already seen that, right? We've seen, that's the other thing I wanted to say, that there's so many forms of it: green, purple, whatever color you want to call it. And how does that compare with sustainable financing? So there are some people which to me have done more tangible things, like they've issued notes where the interest rate, or at least what they charge their customers, is linked to some kind of a behavior, which indicates they're doing X, Y, and Z in carbon emissions, let's say, right? So that's a more direct way of doing sustainable financing that I've seen. There is, of course, a lot of I guess what they call green bonds, or whatever color bonds they call it, that have to do with whether the customers have certain kinds of behavior, or that then they have like how many opposites they may buy and things like that. I think the tricky thing about all of this is to be able to have a consistent approach to all of them, and really being able to tell, is this sustainable financing bond better than the other? like what kind of a price difference are you going to see? I think it's very early on to be able to really indicate what's really happening in that market. All I can say though is that there's a huge move toward it by every corporate.
Yeah, and as you say, at the moment when liquidity is everywhere, it's probably harder to ascertain. But if we see interest rates, credit crunch tighten, people are going to get more creative. And
Yes.
the aviation piece will just be interesting. Is funding a bunch of brand new aircraft enough to get you into, won't be green but won't be brown, right? So that's kind of where I think
Right,
the
exactly.
interesting piece will come. Can I ask you on the OEM side or the interaction piece, and this probably speaks to the wider macro environment. We've seen, we talked about that 50% threshold for leasing for a long, long
Right.
time. You talk to Airbus and Boeing now, they'll say probably 60% of recent deliveries are going out to
That's
lessors, or
right. Yeah.
30% from the order book side, the balance in sale and lease back. Where do you see that going in the near term? And how does it play into your considerations when you're looking at the leasing space?
Well, I mean, if that 60% recent deliveries is any indication, you see that there is a, you pushing that 50% up. I think it's actually already more than 50, honestly. Um, I think I think that the role of lessors will continue to grow more important because, it very unprecedented prices like COVID has also showed how that model really works better because airlines are not in the business of, financing aircraft for themselves. They're in the business of, running passenger or, cargo aircraft or business, whatever. But aircraft lessors are in the business of financing aircraft. Is something they can do more efficiently. And I don't think that, I think that will continue to be very important. I mean, because, for a while, airlines were doing a lot of their own of aircraft and financing of themselves because those markets for them, they had delevered, so they could access the markets really well for themselves. So why would they go to aircraft lessors? But now that has shifted. Yes, there's still some airlines that are very, very strong investment grade airlines who do it on their own, perhaps. They do, they do access the unsecured market, but there are very few who do that.
And on the metal side, Marjan, having these conversations, the catchphrase is narrow body new tech, and lather, rinse, repeat. But when you're looking at a lessor and assessing them from a ratings perspective, as you look at their fleet, aside from narrow body new tech, what are you attracted to, or what are you worried about when you're looking at it from a metal perspective?
Well, I think that, the wide body market is one you really need to look at. Like every time we look at a deal that has wide bodies, we really have to scrutinize to understand, is this the kind of wide body that's going to make it or not? Or is it going to be turning out like the A380, even though now, there's some green shoots about that. One other thing that's really important to consider is part of it is COVID helped it, but you had the e-commerce not going anywhere. It's just growing and growing. So the importance of cargo aircraft, that's really important. And try to see that, the conversion rate of some of those older wide bodies, let's say, which ones are the ones that you think are going to be convertible to cargo aircraft so that you can, have a more positive view about their life and their prices and their, stresses that you may see in those prices. So I think the first thing we look at is pay a lot of attention to what kind of wide bodies we're seeing in our portfolios when we're trying to rate something. Narrow, but very, very liquid narrow bodies clearly are the most favored aircraft, if that's what you're asking. We also we have seen, I guess it's because of COVID, that business jets are doing really, really well. It's a smaller market, of course, but they're doing really, really well. On the regional aircraft market, we write a paper every year about that. It's a unique market, but that market too is, especially with the advent of larger regional aircraft bodies, which which are kind of like they overlap a little bit with smaller narrow bodies, that market is probably going to grow too because of, I think especially before international flights will come back to full normal, which we don't know when that would be. But as you know, most domestic markets have recovered much better than international markets, and that's the kind of aircraft you need for those markets.
And just in closing, Marjan, as you look out over 22 and the level of disruption we've had up to now has been enormous. Obviously, we have the new variant, which is causing challenges, but we seem to be on the up, right? And your own sentiment and optimism as you look out into 22 and you look at the structures and the customers that you're rating, what's your optimism levels?
I'm very optimistic, actually, more in the long run. I think there was one of the airline CEOs, I think I was listening to the other day, who said it really well. He said, as we move from a pandemic to an endemic, we will get used to this, because it would be interesting to see how we will get used to Omicron. Just yet another wave, and it's not going to be the last one, clearly. Is to see the speed of which we will go back to some semblance of perhaps recovery again, like we saw earlier in the summer, because some domestic markets came back to almost normal levels, like 2019 levels. You probably wanted to be higher than that, but it all depends on the vaccine rollout, whether the booster vaccine will help with Omicron or not. But I think that in the long run, though, I think it's going to be about learning how to live with this than constantly looking to go back to 2019 when this thing didn't even exist anymore, right? I don't think it's something that's going to go away. It's more about, like we had flus before, right? And of course, these are a lot more contagious and the governments are very worried about it. But I think, one really good indication was when the US opened their borders to a lot of countries November 8th. We remember that. I mean, the amount of pent-up demand was actually remarkable. And that just goes to show you that demand is there. It's whether the government will let you travel and whether live with this in the long run.
No, I think you're spot on, right? People, this a lot different to previous downturns, and the demand is very, very clearly there. And I look forward to taking many, many flights if I can in 2022.
Yes.
Marjan, I'd like to.
I'm upset that the conference has been.
Yeah, we'll be back. We'll be back. No, Marjan, I'd like to thank you for your time and insights today, and wish you and Kroll all the best in 2022.
Thank you very much.
Thanks a lot.
Thank you. Bye.